We are live. Welcome back to another episode of the Quantium Research live stream. I'm your host Ryan Kia, and we're casually looking through a couple of hot stocks in the community right now. And one of them is a personal favorite of mine. It's called Enquist, which I'll be pulling up shortly. There we go. This is the daily chart. We can see it's in breakout mode, but it should have some form of consolidation now, which works out to be 12, 80, 70. The 1 or 2% doesn't make a difference really, because obviously this res 1380 shows to be weak. If it opens and gaps up, then it's going straight to this bound of 1570, 1660. A lot of people on Twitter seem to be looking to trade this stock as well, and they've got some news coming soon. I think in about a month. It could be good, could be bad. I think it's like financials, so that's an interesting one to try and work around. We'll probably dive a little bit into their financials, try and see what makes sense, what doesn't make sense, because they do have some hedges in play. Looking forward to hearing your view on Tesla. Yeah, Tesla, that's going to be an interesting one to talk about. I'm still not short nor long. Just for reference, I'm just going to pull up the stream real quick and make sure that everything is all smooth. I keep walking past Metro Bank in central London. It's always interesting to see the nice buildings. TUI's also taken a battering. I don't know whether that's the rights issue they had. Very poor rights issue. What was it? Basically 1-for-1. It should have been much larger. If it was 500 something million and I had a quick flip through, that's just very unimpressive. Just about to clear up some of my stuff on my other screen so I can then pull up Bloomberg to get some of my research that I need. Saves me from looking through all the financial statements as I normally do. So that's what we'll do right now as folks start to come through. Okay, I'm going to put the link right now. Alright, we're just setting up the post on Twitter. If I haven't already said, this stream is to look at a couple of ideas that are quite popular in the community, and surprisingly, ones that have come up for me as well. And normally, my ideas aren't things that people tend to trade regularly, which is odd. So I assume it's a clear kind of signal where you have both one set of buyers and all the other sets interested in a particular sector, and then you have the spotlight companies. GKP was that spotlight company. We covered them at around this point. I had a nice allocation, but I'm just frustrated that I didn't add to the 10k PF, even though it was so clear that I should have had a position. I think it was 93 where we were serious about it, and then we had over 100, 103 and above. That's where I bought the ICE allocation. But wow, very impressive. Very impressive nonetheless. A couple of companies have gone crazy, like S-Wave. This is one I've been talking about for a long time. And we tried to go short literally on this break here. We didn't get the short because the shares were unborrowable, unfortunately. I didn't remember to check before I built my thesis for it. And then boom, we'd have gone long above that. And then boom, things looked all right. And we still have an early allocation from the first wave to this point, which is super cool. It's nice to see. Ironically, it's an extremely overvalued company, but it's biotech. And in terms of relative valuations, it's cheap. In terms of basically no debt, So that ultimately gives it a $4 billion market cap, if that's just how the world works now. I'm just going to quote live now, covering right. Welcome to everybody who's in chat. I'm going to check up on chat shortly as I just get the posts out. Ooh, that's some cool stuff. Unnecessary for now. All right. Hi, Angelizai12. Welcome to this stream. We're going to be covering a couple popular companies that have been talked about recently. Alibaba's one that seems to be giving us a huge headache because it's in a chop, and that chop is starting to work out positively for its shares. We might have to just buy and hold for a very long time as opposed to get it cheap, get a return to normalization. But anyways, I've just pulled up 2 Inquest graphs for no reason. We have a clear target of if we were to go long on a little pullback. I don't know what that is in terms of points. Actually, I can calculate it myself. Let's say we get 3 points on that move. Lower end of the bound. Oh, Ask of Aura says Ellen Ray. I'm not sure what that means. But welcome, Ask U Faras. Ask of Aras. Welcome to the stream. Let's say 3 over 1290. That's 23%, if I'm not mistaken. 23% is very impressive for something that's simply playing the wider macro trend. Oil is holding its base, a healthy thing. If I look at oil as well, switch up oil here, UK oil. This is the more expensive form. This is Brent crude oil. We can see $55 and roughly 50 cents. Little breakout today from that base. Well, really, the breakout was on 5th of Jan. We had a base, console, but in a healthy way. Boom. Now it's in breakout mode. But you always have 1 or 2 moves back down to kind of consolidate. And that, what I assume, would be the trigger to Enquist trying to fall back down after closing just around this res point. That's where I'd like to get it. No lower than 1260. But if I enter, my stop will probably be 1150. So say I open 1270. I get 1.2 pence risk, but if I'm right, it's 3 pennies, maybe higher, and it depends on the severity of the breakout. If the price is going here generally, I'd assume oil to be just shy of 60, and the bigger picture tends to put it in there. And an average of 60 was where this company shares were trading at just before COVID. It's 18 pence. Gap to fill there as well, never filled. Right at the bottom, 1796. And that point is a nice wall there. Anyways, gives us around this range as a first target, and the higher target is just around 18 or so, which could be some easy money for those who are looking to trade this stock. For me right now, I want to look into the financials a little bit more, dig deeper, which I need some help of an extra resource, which I'm going to get up on my other screen. We'll walk through a couple of these. Another bit of brief overview. We've already covered Alibaba before, but we will give a little bit of an update. Don't worry about this color again, it's just for my own reference. Now, it seems that you've got a little bit of a chop forming. Nothing too special. Oh, hey, when it resets. And I should probably extend. Yeah, this is just rough. But let's just assume this point. So essentially this is bullish, but I'm not going long until a break occurs, because all elements of momentum are weak, especially fundamentally wise as well. So that's something I like to monitor. If I put an alert at all, or really, I just don't think it's worth it, considering everything at play. I'd like it cheaper. And where is Jack Ma? If anybody knows, let me know. Apparently he's laying low. Oh, and I'm not on chat. Let me get a pop out. Pop up. This is why my code's not working. All right, we've got Bloomberg up. Okay. Well, welcome to everybody tuning in. We're just getting the charts prepped. Also, another update on AO. I mistakenly exited. Now we're trying to determine whether, whether I'm supposed to re-enter. That I'm not sure about. I think I'll still get a lower re-entry, but probably about where I entered, which isn't great at all. Needs to get back above. What was this high? Out of curiosity, 442. It's 439. I saw 442 getting hit as well. If anything, I'd rather hold off. It's not too clear. Still positive in terms of momentum. This wave's cooling down a little bit. Hit just around 120. Alright, so I want to look at Enquist, because Enquist has a huge amount of debt. And now when people talk about debt with these companies, what exactly do we mean? How much does it cost to finance such debt? Now we're going to look at that right now. I know that their bonds are at 7%, which is generally quite high. Not as high as Metro Bank's 9.5%, but different industries. And 7% with an atmosphere that isn't that great for your achievement of your average oil price, average realized oil price. It isn't great. Let's have a look real quick at the chart too. So right now, oil prices are about 55. I'm not sure if they get a premium or a discount, but we're just trying to give a rough picture right now. We'll dig deeper into that shortly. Volume obviously tells a different picture. A drastically different picture to everything. Momentum's relatively healthy in all terms. You've had a straight line basically from 1180 to 1388. So to even retrace by a penny or so isn't a breakdown that ensures a continuation higher. But anyways, market cap in pounds, that's what we want. This is what sounds crazy to me. I didn't know this was their share price after they did like a placing a while back. I just want to know where they're at, because I haven't followed these guys for a while. What happened in 2019? Were they around here? Where was that placing? This could be it. Split. So I assume that's placing. 2018 placing. potentially so. I'm not sure what sent them down to 15. That's an interesting range. Nice to see this gap though, potentially filling soon. Yeah, everything's looking pretty in terms of the chart. So I want to see the financials. What makes these guys special? What makes these guys worth investing in? And most importantly, how likely is it that one can make money on these guys? So we're going to look at the market value. Probably says it here, but I'm going to say it the exact one because I prefer Bloomberg's calculations. 235 million pounds. That's their market value at the current date in time. That's 13.88 pence per share. Revenue for 2020 is expected to be around £1 billion. The year before it was about 1.3 billion. So we've seen a roughly, what are we talking? 16%, 17% decrease on the previous year's revenues. Profit in 2019 was £168 million. Loss in 2020 could be as high as 700 million or so. But that includes financing expense. I'm pretty sure if we look on their investor relations page, we can find their first half results. And we can get the exact bits of data. This is the half-year results for 2020. And the operations update is also a good stand. Okay. Realized oil price 43.6 in first half of 2020. That is very difficult considering oil prices went as low as $10 or so. Futures for the May contracts went negative. That doesn't really affect them considering they were hedged. But 43.6 is relatively high. They were protected. So a recovery in oil doesn't particularly affect them as much unless it goes back to normalized levels, 60, 66, thereabouts. So at 55 now, it's kind of the middle ground between a full-on recovery to pre-COVID levels, which we can see. I assume just by people not reading into the financials, in terms of where oil price was, boom, there. But remember, they've made a fair amount of losses because of this drop, so the realized level will have to be lower. So there is a bit of sentiment in this rally that could be pushing it higher than where it should be before oil prices properly consolidate and they get a decent amount of revenues. We're trying to look from as many possible angles as we can to determine whether this is a trade. Okay, Dar Mohammadi 1999 says, do you analyze gold? Well, I like to look at everything, but at the current moment, we're looking at an oil exploration and production company, a mid-sized company in the United Kingdom that has a dual listing in, I think it's Norway, I could be wrong, Sweden, one of them. So yeah, I don't remember where. But hedged USA B1 Mill says, yes, when one company hedges themselves against a potential crazy event that happens, right? What they do is they make a contract. Say when oil prices were 60, they make a contract that the minimum price the buyers can pay them, say for the next year, will be at this fixed price. And they maybe give up a certain amount at that price that lowers their average a little bit. It depends how complex the structure of the formula is, the contract rather, the forwards, essentially. It works under derivatives, complicated math stuffs. But nonetheless, you don't need to worry about that. Just remember, these guys had a deal that got them their oil sold at higher than where oil went to at lows. Because they, back at 60, said, hey, we'll do 40, I don't know, 41, something like that. We'll look at the exact specifics of their hedging in a moment. But that meant that even though oil's average was probably lower than that for the first 6 months of the year, these guys were able to get, there we go, $35.2 million extra just from their hedges. that $35.2 million extra is included into their average oil price. So if you take that out, then it will be a little bit lower. I think it will be $40 or something, considering their revenues are roughly $1 billion. I'm just doing rough calculations in my head there. Now, profit before tax and net finance. First half last year, decent, 264.5. Last year, the year before last year. Last year's is half one 2020, $24.6 million. Oh, we're going to make sure this isn't pounds, dollars. And a pound, or should I say, a pound is roughly $1.37, 36 or so. I haven't checked the exchange rate in a while, but just divide by 1.36 or 37, depending on whatever you want, and that will get you your figure in pounds to compare against the UK, the market cap pricing in pounds. So that shows that whilst they didn't lose before tax and net finance costs, we got to remember this business has a lot of debt, and because they have a lot of debt, they pay a ton to finance that debt. If we can see, I don't know exactly what this is composed of. I'll probably find it if I look through, but I bet you a chunk of that includes debt repayments. I'd like to see their cash balances out of curiosity. But before we do that, let's look at production. Hikes across Magnus. I think Magnus was a new acquisition a couple years ago, or they bought a higher stake in them. Net debt, let's see, includes 166 million of interest from senior credit facility bonds. That's much larger than before. Net debt decreased by 61.9 million. That is somewhat positive, but my worry is how long do the hedges last, and how favorable are they for the second half of the year and also 2021 and onwards. I think it would be better though, considering oil prices are now 55. If they go to 60 or so, the business is in a favorable position to then negotiate some hedges, because considering their debt position, it's better that they get guaranteed income as opposed to huge unexpected losses or huge unexpected profits. That seems to be why Premier Oil had to merge with Chrysaor recently, and there went their opportunity to be independent. Their CEO had to step down because Chrysaor was the bigger party. All right. So, in terms of next year's forecast, very idealistic. I want to see what the street folks think and then compare some thoughts we can dig deeper into. Let's see. Street folks think 19, 20, 17. Nothing too optimistic. 14. Right now we're at that. I want to dive deeper. And see what we can find out. Okay. Just going to flip through this and see if it makes sense. Okay. Enquist has 1.4 billion or so in debt. They just paid off a little bit, so 1.35 or so. They have this new project called, is it Pres something? I remember reading it earlier. They're doing okay for 2020. Production's good, between 57,000 barrels a day and 63,000. A little bit lower than the midpoint of that. So let's say 57,000 just to be safer, right? But realistically, 59.5 or something like that. But we account for any other unexpected losses by reducing the production figure by roughly, what are we talking, 4%, maybe 5%. Companies on track to get their midpoint. Yeah, so that's what we remember seeing. In terms of Kraken, it's relatively stable. If they can maintain above 30 to 35,000 barrels per day in that asset, things look okay. Just getting a little update. They got a 25% stake in Magnus and took over as operator. Then they executed an option to get the remaining 75%. And that's why Enquist's production is much higher than it was a couple of years ago. Wow, these guys seem like somewhat of a success story versus the other oilers. PNB, let's see. Net debt. Okay, first half of 2017, net debt was 2 billion, so it's slowly reducing. Yet, as it's been reducing, let's look at the market value of these guys. 2017, debt was... well, it even went to 47 with all that debt. I think this stock only moves with respect to oil price. So if you're bullish on oil, generally, it will have these little spikes every once in a while. But if anything, I think it seems to track, yeah, this point. Let's clean things up. Momentum looks nice. One of those heavy spikes. If I can get 1280 tomorrow, I'm in. Very interested. Our risk at say 13 would be... Ooh. $11.5 minus 13. Just be safe. 1.5 over 13, which is, we'd be risking 12%. If I put that into my models, I'll calculate how much I can put up, which is fine. But I can't seem to find much wrong with it, other than over expectation for the finances. With oil companies, you always see over expectations. When you have an impairment, people come out and say, oh, that wasn't expected. But most companies that are in the sector, when oil prices go really low, struggle with such similar write-downs of assets. And for that to happen, we would wonder when the financial calendar... better idea. Enquest financial... yes, okay. So we're going to have a look at their financial calendar, see if we can find any information about what's coming up next. Full year results 2020. Q1 operations is fine. That's probably going to be positive. I would look to, yeah, full year results. That's about 2 months, as it says on the TradingView graph. 2 months. You have a bit of space as well if you want to get out, get a ball back, get into the trade kind of thing. We'll be following oil closely. If it's going to retrace a little bit, even $2, then we can maybe get a brief entry. That's what I'm thinking. I'm just going to write it down here. Wow, I had such a nice trade idea written down, but I never looked at. Let's see. Hi, Boom Indian. nice to meet you. Welcome to the stream. We are looking at oil companies at the moment, but we're going to move from oil to Tesla, which is a very popular stock. This is just one stock that I think I'd like to catch a trade on, if I would be so lucky as to get the chance. I wonder what the spread would be. Let's say an hour. You can generally deduce the spread of a stock based off looking at shorter term candlesticks. Yeah, so I want really 12.8. It could go as low as 12. Really, here, yeah. But I don't mind. I like 12.8, but if I want 12.8, I want that tomorrow morning. Otherwise, the trade's not going to work out, personally. I'm great. Happy New Year. Thank you. Happy New Year to you too. From where in the world are you typing from? Boumediene. I hope I'm saying your name correctly. I'm Ryan. Welcome if you haven't already. Come to one of our streams. We do a series called the 10K Trading Portfolio Challenge. It's not one of these challenges where people use virtual money. It's real money. So if I lose all of it, or even make on the portfolio, then you shall be my guest to watch. The guest of honor. Which I am just pulling up right now. We started this about a month ago, and I've taken a couple days just to slowly transition back into things, because I've had too many trades that have worked out. And normally, when you've been doing this for a long time, you don't get many trades that go back to back to back. So I like to cool down, give myself a bit of rest, and then continue therein. Because otherwise you get too excited. You trade every single second you have the chance to do so. Because you're making money. You have that rush kind of thing. Alright, let me put sound on every message. Is that going to work? Well, hi Esbatu73, welcome to the stream. We're looking at Enquest's share price right now, but we're going to look at Tesla shortly, which is a really popular one that has been in the news for a lot of reasons over the past however many years, 4 or 5 years. I am live streaming from London, England, the beautiful London, England, that is now locked down as a result of the COVID lockdown measures that are happening right now. Correct, USA, Boumediene. Where about in USA? I sense a French twist. Hi, Herwini. Am I saying this right? Herwin Ignacio. 0118. Herwin, welcome. Welcome to the stream. Hi, Ryan. Love the series, says Luke7400. Thank you. Thank you for coming back and visiting our stream. Can you please go through the charts of Nvidia and Peloton? That's a crazy one. I can give you some financials on Peloton right now for you to rethink your perspective on a $45 billion company that sells treadmills with a virtual interface. I'm not disregarding anything they've done, but let's look at a couple things, right? Peloton, 45 billion market cap, right? The company is traded at a valuation of $45 billion. Revenue, $2.4 billion. Net profit, 100 million. How do you get from 100 million to 45 billion? Well, you times it by 450. If I'm not mistaken, their price to earnings ratio is 450 for the year. Forward earnings, let me see what it is. Okay, forward, next 12 months earnings expectation, it's still 260 times next year's forecasted earnings. Do you know how many years that takes to get back what they'll probably make next year? Guess. 260 years to get back just their market value alone. Well, we're going to save that energy before we dive into Tesla. I love Elon Musk, don't get me wrong. I think he's an amazing guy. Hey Kartik, we're going to look at Baba again. Don't worry, we'll go through some bits. We just looked briefly at the chart and kind of said that it's no clear setup for me right now, but there are a lot of things to talk about regarding them, including the disappearance of Jack Ma that has supposedly been denied by a source close to him, but he all of a sudden can't speak for himself. Very interesting. But nonetheless, I need to get this sound notification going. For some reason, I can't get a sound notification going, which is tough. Hi Solitude92, welcome to the stream. It's nice to see a lot of new usernames today. We do a 10k trading series where I put £10,000 of my own money to trade. I did that about a month ago, and we track all of the positions live on our brokerage account, one of the biggest brokers in the UK. I don't really like the execution here, being completely honest, but we've chosen them for one main reason: reliability. You know, this is not a demo account, this is a real account. And yeah, I'll pay a little bit more fees just for the sake of transparency, so that's fine. Okay, so let's pull this up right now. Okay, boom. So I just want to see if everyone can see that. Not my emails. Okay. So this is the account size right now. We have no positions, nothing. We've taken a couple days off because I've had something like 6 or 7 trades in a row. Not even that. 3 on the ISA as well. 9 and the investment account. 9 or 10. I don't like thinking about that because it makes you think, okay, when's the next one going to work badly or whatever. So I've taken probably 3-4 days off trading. I've done some streams to get back into the flow of things, and hopefully we will now get executing some ideas. And I've got my notepad ready with a couple of ideas I've prepared already, including Enquest that we want on a pullback, but we may not get. We shall have to see. This company's worth about £220 million. It's traded on the London Stock Exchange, but also another one in Europe, but I'm not sure exactly, I don't remember. But look, we're at £10,760, so we've made 7.6% in about a month. Nothing huge, but if you think about it, 7.6 a month isn't what you don't earn consistent income or anything is in trading or even with investments, because you have to encounter drawdowns. But I think the bit that we can show is you have some good months, some bad months, but essentially at the end of the year, the returns you can make by having a system that you built for yourself, refined, and got to a somewhat consistent level. I've been trading for just over 7.5 years now. That shows that you're able to slowly build up your account. Think of putting your money in a bank account. You get, what, 0.5% a year? We've done 7% in a month. Nice. We could be down next month, but at the end of the year, the aim is to always have made some money. So when I manage my own investments, obviously I manage a larger size than this, so I have multiple investments at one time. You can see on our positions right now we have 0, because this is part entertainment, part, applying a legitimate system, my own, that I will never ever let go of until my last breath. The secret sauce must be preserved, but nonetheless, boom. DC, Washington DC. Hasn't something been happening in DC? Is the Capitol in there, or Capitol Hill? I've heard in the news. I'm not too familiar with US politics, just because it makes my stomach queasy. But I heard there was the first time Capitol Hill was broken into or something since 1860 or something. Hey Kartik, yeah, we'll sort it out for you. We'll look at Baba. Have you been following Baba recently? What are you looking to do? Buy, accumulate a long-term position, trade? Are you an options trader, a share trader? Because in our case, as you can see from our quotes, the only options we get quoted here are really things like US equity options, but not to the degree where you guys can buy like a call at, I don't know, a certain amount and pay a really low premium. The way they calculate these are super expensive. I think it's just because CFDs are the systems we use. Contracts for difference. So if I want to buy shares, I go long. If I want to sell shares, go short. If I don't have a position or just sell them, you know, I would go in at the bid and whatever, and I would have negative shares if I wanted. And that means I'm borrowing the shares from someone to buy them back. So if the shares go up 200, 300%, I now owe them 200, 300%. The shares go to nothing, I make at best 100%. That's obviously not how I trade, but those are the kind of scenarios. So when you're shorting, you have a lot more risk, but it's more likely that a company can blow up than survive and become an established company for 50, 100 years. It only takes one scandal. But chasing that one scandal by just deduction of chance and probability will make you maybe lose 10 times your initial investment. And by the time a scandal happens, sometimes when you're chasing a short, you'll have nothing left. So you could be right, but you could lose money. And I want to emphasize this again. It's not about being right this game. When I started, my rate of being correct, my basically win rate, was much higher than it is now. But the magnitude of my winners now is higher. Reason why? I don't chase a position. Now, AO was a position we were long from at £3.83 or so. 383.5 pence per share. It was at this break. Yeah, this break. The 16th of December. I remember that day. I was just casually chilling at a friend's. And then boom, break, all that. Now, we've seen it go 430 and all that, I think. No, we'd seen it go, 430 highs. Literally, that lasted a couple minutes. And then boom, as it went down here, we cut ourselves out thinking that the setup is over, stupidly. And I made a bit of a premature move. I should have waited till the end of the day. I could have risked 1 more percent to make 7% more that I could have had now, which would have doubled our profits. We made about £180 for that trade. We could have made 360. But I'm not chasing it. I'm not going to be like, oh, now it's broken out, I'm going to go long. Oh no, it's dropped, I'm going to close. Before you know it, you've burned away all your profits and you potentially make a loss. And when it falls all of a sudden, you have no way of getting out of a really, really unfortunate situation. An unhealthy situation, rather. Okay, so Peloton, those are my thoughts. Expensive, but could be more expensive, but not in the way where I'd like to buy them, if that makes sense. Oh, that's not so pretty on the hourly. Huh. Wow. That's not pretty at all. But anyways, back to where are we looking? Enquest. So I'd like to potentially trade these guys. And this is a free idea. Check this out. Whoa. For any of my peeps who trade in the UK, this is a possible idea. It does variate depending on what happens tomorrow. But I want to look clearly on the day, worst case scenario. So really, I'd like 13. 13 means I'm probably giving up half a penny just to get in. But the sake of getting in is fine for me. Whilst I'd like 13, I could be cheeky and try get a penny lower. Let's double check with a similar situation I'm trying to get in at. Yeah. It depends on oil, because oil isn't holding down. In fact, it's on a tear. And it could have some overnight action. Depends what happens. in the Asian markets. And what day is it today? Pretty sure it's Friday. 8th is... maybe. There's a chance of a shock. All opens up, gaps up, closes down. Something like that. Well, we shall see. Okay. And also, if you haven't... How are you a swing trader or a day trader? Well, I'd say I have investments. I trade what one calls the great period, the meat of the move. So between 35 days and 55 generally, from the samples I've taken, seem to be the best rewards, quality, reversions, all that stuff. There's a heavy quantitative aspect that I can't dive into, but I also could hold a trade for a couple of minutes using leverage to my advantage. So we had a trade on, what is it? Let's see which one. I had a couple of trades where on this 10 account, this 10k account alone, I'm pretty sure there's not much of a history because it's only been 1 month or so. But I want to pull some up. Let's see. We had a trade where we made £173 in 1 hour. So that's roughly $200 just from an hour. But the planning takes much longer. We had a position where we made about £400 in 2 days. That 2 days, in terms of dollars, $550, let's say. 6 hours, we lost £45, roughly $60. So we wasted our time. It's not about hourly wage or all that, but I think the videos are entertaining on the Quantium Research YouTube channel. If you guys haven't checked this out, have a look. They're a little couple-minute long excerpts, seem to be quite popular, where I cut the moments where we trade across the stream into a simple video, and some could be across many days, weeks. In the one that's coming out tomorrow, the video that should come out tomorrow, we held the trade for I think 2.5 weeks. We only made about £100, but bear in mind, risk taken, reward taken, all that stuff is more important than monetary values. What I'm going to do is I'll put this here. Also, if you want to understand how a VWAP, a volume weighted average price, works, I'd first look at this video that we've done. I put a link there to moving averages, volume weighted moving averages. So volume weighted moving averages can get you your volume weighted moving average prices, which is essentially what I assume you're talking about. That will give a bit of an idea if you're interested in that. These videos are quite new, about a month ago. Beginning of the series we put these out. But today's focus, ooh, look at these ripping. Oil is ripping like crazy. Yeah. There's a chance that we don't even get this trade, if I be completely honest with you. Hey S-Chep, how you doing, man? Happy Friday. Didn't even notice the week was over. I'm planning a trade for tomorrow morning, realizing there's no tomorrow morning. But that's the beauty of there being trading into the futures close. We're looking at oil and the impact of Brent crude right now, the price of that on UK mid-cap oilers such as Enquest. We have a big company here. Well, not big, but GKP has a big rise that it's had just from this move. Look at that, 50%. Whew. And yes, we're still in lockdown, man. Oh, it's absolutely crazy. I got back from visiting the family about a couple days ago because during Christmas, students are allowed to go from, I think, just before Christmas till February at least once back. And now they've put police by the train stations. It's almost like it's a war or something. I don't know. I used to always go for a coffee nearby because I live in central London. So Farringdon thereabouts, literally away from the Bank of England Museum, the offices of Goldman Sachs, Deloitte, all these big dogs, City, everywhere. HSBC, the walkie-talkie tower, I was there a couple hours ago. And everywhere's closed. It's like a wasteland. There's nothing to do. Who goes to get a takeaway coffee at like Costa or something? You want to go sit down for a couple of minutes. Everyone's just getting pret-a-manger. And the staff are so rude. Every time I go in there, I just shoo me along. But oh well. But anyways, we are looking at GKB's shares too. I can't really comment on them. I regret not buying more, but I wish I got them for the 10k PF because that would have looked nicer. We're up 7.6% in a month, which is quite cool. I'm not going to touch these, but I just wanted to show those who asked about the options we have available here. The only way I can properly trade options is using IKBR, Interactive Brokers, which means you have to have an account in dollars, which is a tough one, considering someone who's more bullish on my home currency as opposed to the dollar. Actually, for the place I work, I get paid in dollars, US dollars. So the rate was 126 or something last time I had something paid in dollars, and now it's like 139 with the currency transactions place, because the actual spot rate's like 136, but they end up having spreads a little different because obviously brokers got to make money, the guys who transfer the currency, like TransferWise, World Remit, all that stuff. So I'd have rather been paid in pounds, but it is what it is. Taking a 10% pay cut for nothing. And you can't control it. Thank God the week is over. Yeah, GMS, I'm not going to lie. Well, Andre, I should say. I've just been chilling, man. I don't know what it is yet. I rarely have streaks of like trades working out back to back to back to back, you know. So I've just taken a couple of days off. And we did the fundraiser. And we were just distributing some stuff. Today, I completed 2 trips around central London. There were so many people out on the streets despite it being so freezing cold. So I had fun doing that. I sat down, had a couple conversations. One guy, his name is Max, he was literally sitting in a box. So after the people who were helping out as well with the fundraiser, the stuff we bought, they were carrying it. We gave him some stuff and all that. But I sat down and talked to him. He said he had cancer. He'd come into remission, all that stuff. But he grew up in care in a foster home, all these other things. And it wasn't one of those situations where you'd think, oh, this guy's trying to, ask for money. He seemed like he'd had a tough life. And when we trade, we make a little bit, lose a little bit. That's a regular kind of part of the game. We always feel bad for ourselves. And that's the problem, man. We get too sensitive. People who didn't buy Tesla, for example, are saying, oh man, I'm one of them. I wish I was doing that. Oh no, Tesla's an extremely overvalued company. And the people who make money are saying it's going to the moon, it's going to the moon. But in reality, why don't we just think logically for a minute? Yeah, it's expensive, but would I short it? Probably not yet. Wouldn't that be the easier way to go about things? But anyways, another thing that also happened, I got out of AO way too early. I closed at 4:05, literally 2 days later it's 4:29. That's unfortunate, but what can you do? I didn't want to re-enter, so immediately if I have one of those kind of tilt mode scenarios where I just don't know why I did something, I give myself a day of doing no trading. I can sit at the screen, research new ideas, but I limit myself from trading, mentally. How do you search for stocks undervalued? Well, you build your own process. For me, the things that I can disclose, well, because everyone has their secrets, their secret sauce. What I would say is first understand the importance of both fundamentals to a company, different sectors, why are they valued a certain way. So let's say stocks that are generally referred to as growth stocks. Why do they trade at higher price to earnings ratios. So let's say that they're multiples. So if a company like Peloton we talked about, they have a price to earnings ratio based off this year's earning or last year's earnings, 2020's earnings, of 450 times. So they need 450 years worth of profit at their 2020 levels. They didn't make profit, but at that 2020 profit, 450 years just to get their market value of 45 billion. Profit was about $100 million. Market cap, their market value, is roughly $45 billion. So they're a growth stock by the way of that. Why are they holding up so well? Then we look at stocks like Tesla. I don't even want to think about what their P is. Are they earning income? I think they had one profitable quarter and things looked up for them. That was at 180 or something dollars, 2018 or so, I remember. I just never really looked since, and that's a shame. And they did a stock split or something. But anyways, that's besides the point. Look at, let's give an example of what we looked at last time. Just in terms of relative multiples. We looked at Alibaba. I know Kartik wanted us to look at Alibaba, so let's just go through some of the notes we had from a couple days back. I think that was yesterday's stream or the day before. Alibaba is an e-commerce company with roughly 80% of its sales from China-based e-commerce. The rest comes from cloud computing and other diversified revenue sources. In terms of dollars, let's just use their US listing. What is the value of the company? Well, it's $640 million or so. And the revenue for that year, let's say it's $80 billion. Net income, $14 billion. So to work out how much the price to earnings ratio multiple is, you'd get that 640 and you divide it by the profit, which is say 14, let's just say, round it. That's 45.7. Now that doesn't sound that cheap for a company where its peers are generally anywhere between 30 and 60 or so. Now, if you look at the next 12 months, their growth expectation, I can pull it up actually, their growth expectation, we'll use something called a 12-month blended forward price to earnings ratio. That has them at 19.7 times, which makes them look really cheap versus really anyone else. The mean across the main guys, Mercado Libre, Amazon, JD.com, and VIP Shop Holdings, they're quite smaller, but they kind of match the e-commerce style. Shopify could probably be in here too, but I haven't included them. Let's take an average. That average 12-month forward one. So in 12 months' time, what's their profit going to be? You divide their market cap right now by their profit in 12 months. That gives you, on average, 28.8 times. So Alibaba's trading cheaply versus those guys. So now we start to see, why am I, if I'm bullish, I don't know, oil, why am I looking to buy Enquest over GKP? And instead of GKP, why not BP or Royal Dutch Shell or Total? Let's go international. You have to ask yourself, why are these companies valued that way? Digest everything, break it down, look in terms of relative one another, and then you can at least start to see what looks cheap versus the game and why is it cheap. So why is Alibaba cheap versus JD.com, Tencent, Amazon.com, Mercado Libre, and so on, Shopify, whatever. Now, the reason why they're trading at a cheap valuation is because there's a lot of risk right now with the regulatory developments that have been going on. Governments kissing up to Tencent because they're following their rules. And Jack Ma, I think he was the founder, he's not the CEO of Alibaba, he said some comments criticizing the rulership of that country. What do you think they're going to do? Encourage it? No. And that's exactly why there's been a messy probe into the company's quote-unquote monopoly practices. That's one leg of here. And the other one, I assume, is to do with the Ant Financial, that's it. Alipay, if you've ever heard of it, does, I think they have a billion active users a month, right? 1 billion, right? Those users, this company, Alibaba, owns a 33% stake in Alipay, aka Ant Financial, and any other business Ant Financial has, including Alipay. And that IPO didn't list because apparently it wasn't following China's accounting practices and all that stuff. But there was some falling out there. And that explains why the shares are down from 320 to 230 now. Roughly a third has been hit off. And we saw lows at around 212 too. Okay, how do you access included indicators data in pipe script? I want to access visible range data. I'm not sure what you're trying to ask there. But yeah. Well, welcome to the people tuning in on YouTube as well. Nice to see everyone. So yeah, Alibaba, we've already talked about this, guys. I want to know about Tesla. I haven't dived into the financials because I really don't want to short this one. But this is, whoa, 880 highs, 884 even. It's at 860 now. We were right here, you see that? The fact that it didn't break below here, closed just on that bounce. We were saying, if anything, we'd be buying Tesla at 750, 760. But I didn't buy it. Because it doesn't work with my strategy. I know a trade's a trade, but this is just grossly overvalued. I absolutely love Elon Musk. I think he's an innovator and he deserves all the success coming his way. But I can't. Everyone's like, just buy it, it's going to the moon. At an $800 billion valuation, what's it going to do? 8 trillion? Yeah, 10x from 60 billion to even more than that now. Fine, that was impressive. But it doesn't just do 10x each time. There's a point where things go crazy. ARK ETF runs out of money. I love Cathie Wood, but that's just how the game works. Whoever's made money here deserves it. And if you shorted, well, it's unfortunate, but you bounce back, right? So, market valuation of Tesla, we said $812 billion. Ooh, revenue, $28 billion. Much more than it was in 2017, $11 billion. And more than last year. Every year it's increased. Net profits. Oh, they're expected to make roughly $660 million. So that gives them a price to earnings ratio. Normally this figure isn't too useful, but let's have a look. That's billion. Oh. Must I go on? This is a bit aggressive. 8, 12. That's a lot. Wowza. No, I've done that wrong. One sec. Let me put it into my spreadsheet. Saves time. Ooh. What a share, though. Let's look at the 12-month forward price to earnings ratio. The blended forward one. So next year's income. And then we divide the market cap by next year's income. The market cap right now. That is 218 times. Isn't Amazon like 100? Something like that. Shopify 140. This whole game has just become extremely overvalued. It's like who's more overvalued than the other. It's a mess. Absolute mess. It's an indicator. Says Marcinu 330. And I want to access buy-sell volume from it. I wouldn't know, man. I wouldn't know. GMS says, love to hear they're helping out, not their situation, obviously. Yeah, man. It gets tough out here. Everybody's trying to achieve their dream. And you just got to keep fighting, man. Same goes for us, guys. With trades, we shouldn't get too ahead of ourselves ever. Because you can blow up your account any day. That's why it's good to go slow, man. Slow. take some time off whenever you feel like you're pushing yourself too far. Otherwise, you're going to blow up without even trying to. So I said about looking at fundamentals. You should try and look at these bits of data. And to do it, learn how to use spreadsheets. And if not spreadsheets and you want to go the extra mile, learn how to code. I bet you the folks in here that are hardcore quant guys would agree with that. Python's probably a good place to start. You can get a good course at Code Academy, even at universities if you're at that age. If you're a little older, there are in-person classes. Well, probably not because of COVID, but online classes are really useful. YouTube videos as well. Books if you prefer learning that way as opposed to a visual way. That would be a cool thing. If you don't want to go there though, look at technical analysis. How do charts work? Essentially, how do you get the right timing or at least a fair price versus if you just bought when you did the research? Because the problem is you have a lot of people look and see, they start looking at Tesla at 740, let's say. Tesla goes to 856 and they say it's going to go higher because I've seen it go 20% in old times that I've been following it. And you're thinking, did you not realize that nothing fundamental has changed about the business since here? Well, maybe the stock split, but what does that even mean? Earnings, not too impressive. The sales figure was a little bit less than what Elon Musk wanted for the year, but better than analyst forecasts. And there was a huge hype. There's a lot of competitors. I was researching about China, which I'll pull up some of my research right now on my phone. Let's pull it up. I was looking, they call them the Fab Four, the competitors of Tesla, Chinese, I was going to say small cap, no, large Chinese electric vehicle car manufacturers. So here are my notes. I'll read them out. Let's see. So I was looking at NIO and a potential breakout of their shares above $54. I'll pull their chart up despite them being expensive. Oh, yeah, well, that happened, I guess. Shame I didn't get to see it. So a breakout above 54, I said we're looking at obvious all-time highs of around 57, which we're seeing here. And new all-time highs likely. Longer the base forms, as Kathy Wood said, the larger the size of the breakout. And this was forming a consolidation for 3 months. Look at that. Holding. A little bit of a cool down. So NIO had some decent analyst forecasts. Goldman predicted $59 a share. Credit Suisse, 65. These guys don't normally price EV companies so attractively, but they did. And it's valued at $85 billion. But then again, Tesla's worth $700 billion. But you can't compare a startup electric vehicle company that has, what, a fair enough chunk of the market to Tesla, which is a world-renowned brand that has gone through so many drawdowns in terms of its share price. So I was looking at Tesla having made reductions in price to getting cheaper models out, a core element of his marketing campaign. But NIO wanted to be more of a luxury brand, so they decided not to cut prices, and it seems that demand isn't reducing, typical economics, eh? But the question is, will price cuts for this business harm the premium that is attributed to NIO versus competitors in the Fab 4 in China? That includes XPeng, which has a valuation of $36 billion. These are quite big, you know. $85 billion being NIO. XPeng, $36 billion. Li Auto, or Li Auto, $32 billion. And BYD Co., $92 billion. So they're bigger than NIO, but I think they had a different financial situation, which makes them fairly valued to be above. And there's a little graphic as well I can't seem to pull up on here, but I'll interpret it through my phone. Chinese Fab 4 sales combined monthly sales of these electric vehicles have only just overtaken Tesla's. But then again, there's 4 companies combined versus Tesla alone. But the growth of these guys has been steady upwards. Tesla's like up 1 month, they can't make it the next month. They can make it for the next couple of months, they can't. So it's almost likely that China's Fab 4, the likes of, as we mentioned, NIO, XPeng, LI Auto, and BYD Co., these 4 companies, might actually overtake the total monthly sales that Tesla is getting. Tesla can raise funds at a higher valuation, all that stuff expand. But sales don't come from building your trading and all that. It comes from a quality product that eventually leads to people using more, coming back. But with NIO, some of the largest institutional shareholders have added their holdings. You have BlackRock added 10 million shares on top of 40 million shares, and Renaissance Tech, that's Bill Simmons' investment company, which I'm pretty sure has averaged like 66% for, is it 30, 40 years? 66% a year, pre-fees, obviously. So let's say 40, 45% after, because they charge like 30% performance fees. You have them adding 5 million on top of their 15 million shareholding. That was about 2 months ago. So we're talking anywhere from $40 to $50 valuation. So they see some sort of upside in this company. Do they think it will try and be like a JD.com in China versus Alibaba kind of comparison, where JD is worth 140 billion, Alibaba's worth 640 billion. You see outperformance of Tesla now, underperformance of Tesla relative to the Fab 4 in China soon. We shall see. Depends what happens. I'm just going to check on the chat real quick. For sure, coding is great. Ooh, what stock do you suggest to buy for next week? I'm not a stock tipper, so I wouldn't have an answer to that. I just trade, try and generate value where I can. But what I can say is what I'm trying to do next week myself, as a person who has access to UK equities, I would like to look to potentially trade Enquest. If I can get Enquest at around 12.9 pence or 13 pence, I really couldn't care less. I'd have my stop at 11.5 and look to get around 15.50, 16.50 or so. Ooh, my bad. I hope that muted. Alright. So yeah, some things are still open. That's Alibaba, Wayfair, Jinko. Jinko's taking a hit. What a volatile stock. One day, the other day. For sure, coding's great. I don't know any serious language, but PineScript here or Easy Language for TradeStation is awesome. I'd love to learn C++. I know a bit, but not nearly enough. Yeah, C++ everyone says is quite difficult. I prefer Python over anything, purely because it helps with compiling data. And as my process is quite data heavy, I like to do things myself and be able to maintain the secret sauce. How long have you been investing? Well, the thing is, when I started, I was just trying to make fast money and I didn't realize what I was doing. I was probably guessing half the time. And I started in July 2013, the 11th of July actually. And I have been trading and then investing since. Now, the reason why I find it difficult to differentiate between investing and trading, or find it easy actually rather, is because when you're investing, you're not just holding things for at least a year and all that stuff, and that's how you make your money. You have a bit of exposure where you trade, so cash generally on hand, you use some margin sometimes, and then you have investments that you hold on to that are quality, and you rebalance every once so often. So when I started, I was only trading. I didn't know what investments were. I wasn't patient enough to hold that stuff. But I think the first time I got a hang of investing was 2016, where I bought into a company called FerexPo. It's called FXPO. And I remember seeing them go from like 30 to 86 or something. And the financial situation changed properly at 86. Their valuation, in my opinion, was between 250 pence and 350. I got out at around 250s, 260. I got too excited too fast. But I held them for a year and 3 months. Now, that was for someone who'd been holding shares for a couple of days, maybe a couple of hours, literally trading. Small returns, being right almost all the time, but not making much money. Just getting one or two big hits every once in a while. And then also there was huge swings. I was taking too much risk, all that stuff. I eventually got fascinated by the fundamental side, the technical side, the quantitative side. And I started experimenting things. I'd always reach out and see how the pros did things and try and be creative. I think the beauty of investing and trading really is that you can sit at 3 a.m., 4 a.m. and just research, and there's like a wealth of information going through your mind, and you're picking through the quality. And when you see any red flags, looking at account statements, all that stuff, balance sheets, cash flow statements, or income statements, the three main things, you then find that beautiful feeling. And that is why I continue to do this. And about 3 years in, when that happened, when that good investment worked out, as my portfolio grew, I started having exposure over time. Now most of my assets are held up in investments. Hence why I've allocated a little bit on my own investment portfolio that is separate from this to trading, that I make position every once in a while, tiny bit of the ISA, and the whole of this 10k as part of a series where I just want to show that this is how trading really is. This is no funded account, none of that stuff. It's my own money. A little bit I put out from my main account so that if I lose it, I'm still trading my main assets, but I can make videos, which if you check here on YouTube on our channel, Quantum Research, I do these little clips of the trades we made on this series. We started at £10,000 about a month ago. We're at 10,760. This is how trading works. It's not fast money. It's not super easy. And 7.5 years into the game, should I say, I now find that I'm much more patient and I don't chase things as much. But from time to time you do. Do you use financial indicators on TV? Check out some of the charts like PE, market cap. It's hilarious how I could trade Apple if it was double bottom on PE. That's quite funny, yeah. I haven't used this stuff here much. But the only reason why is I have access to a Bloomberg terminal. So I can get that information from a source that has been doing it for so long, that has people who input the data there instead of it gotten from a database that could be incorrect kind of thing. It's nothing to do with TradingView, but it's more like if you're relying on that figure to be 100% right, it's better you get it from a place like Bloomberg. But Bloomberg is wrong as well at times. So, if I sense something fishy, I'll have to go to the raw data, which takes me a bit more time. But the beauty of coding is that you can now source that data without really doing much. So I don't see much of an issue. I think everyone should learn how to code, young or old, if you're going to open an investment portfolio. Before you even make a comment on something, make sure you have your data. And if you're going to read balance sheets, financial income statements, cash flow statements, all that, all the time, like Warren Buffett did, then you have grounds of argument. But if you don't, you're just lazy. That's all I have to say about that. Don't be lazy. Be creative. Done following you on YouTube. Appreciate you doing that. I'm SuperTrader881. Done following you on YouTube. As in, like, don't wanna or have done so. I'm assuming it is because the number's gone up. So appreciate you, man. Appreciate you. The good old BBG. So it is such a unit, bro. Look, Andre, if you want me to look at anything right now, yeah, we will look into the fundamentals, bro. Anything quality. I was looking at Tesla. Next year's earnings and today's market cap has it as a forward price to earnings ratio of 218 times. Oh, it's only 218 years before they get this market cap accounted for. Wonder where General Motors is. 7.3 times. This is the next 12 months worth of income. And then you divide this. No, you divide the market cap of the company by that income. So General Motors is expected to make what, 10 billion next year. They're trading at 7.3x. Fiat Chrysler is trading at 6x on a 12-month forward price earnings ratio. Ford Motor Company is trading at 8.6x. Is that a loss though? I'll double check that another time. But Tesla, 218. How does that make sense? I love Elon Musk. Like, literally. Love the guy. But it doesn't make sense, bro. How do you screen for stocks? Me, I can't disclose that because that is my secret sauce. That's my secret system. But if you want to get preliminary ideas, TradingView has a pretty good one that I don't use much. But I would suggest looking at them. Let's have a look. Ooh, an open screener. Don't know if it works that well. But, oh, okay. Let's look at companies with, ooh, a 1 year beta below 0.5. That's very simple. Don't actually do this, please. But let's just say market, well, actually, what am I talking about? The markets have recovered. We shouldn't be doing a beta below 1.5. We should do a beta of 3. Yeah. Above 2.75. Aggressive market sensitivity. Yes. That's that. Okay. All that there. Where's the... Nah, give me that beta. Yeah. Alright, the 3-month high, low performance. Yeah, all that stuff. Let's get the 52-week high and low too. Okay. So, this sensitivity, Cineworld is a huge beta if the stock market in the UK, well, its relative index is high. I don't know how they calculate these, but I assume they just use a simple rolling formula. I generally get different figures, but because I do it specific for each one. And I adjust for volatility. I can't go deeper than that. Because that will give away the secret sauce. And I don't make money from these streams. Or any of the content we put out, so yes. And that's been my life's work. But anyways, this company has the highest beta of the lot. Capita as well. What? Capita. I don't get that. Interesting. Let's have a look at CPI. What about NIO? I was just talking about NIO a couple minutes ago. I can bring up exactly what I said. My statements. I said NIO has a market cap. Well, now it's a little bit higher. It's roughly 90 billion, let's say. It's more than expected to double its revenue this year. Revenue of 2020 is roughly 2 billion. 2021 is expected to be almost 5 billion. Very nice growth, considering in 2017 they had no revenue. That is some impressive growth story over 2-3 years, not even 3 years, 2 years. 2 whole years of trading. Well, 3 years actually. 3 years of trading activity. Their earnings are expected to be negative, a loss of about $1 billion. Next year, $430 million, a little bit less. You'd think it's overvalued at $90 billion, but let's pull them up. NIO. You'd think that they're overvalued at what? 70 billion? That's incorrect. Roughly $90 billion, right? But Tesla's been making price reductions to sell more. Has that worked? Well, I assume for their share price, but not for their sales. They didn't breach the 500,000 units that Elon Musk wanted to be sold in 2020. They were just shy, literally a couple of hundred short. But NIO has shied away from cutting the prices of their electric vehicles. That's because they want to establish a luxury positioning for its brand. And I asked in my notes, will this work? Will price cuts harm the premium that's attributed to NIO? If, say, they wanted to cut their prices and compete with everyone else, if their luxury brand thing wasn't working, and they were a Walmart electric vehicles company, then what would happen in their valuation, relative valuation versus XPeng with a 36 billion market cap, LI Auto with a 32 billion market cap, and BYD Co with a 92 billion market cap? All these four companies I mentioned are referred to as the Fab Four in China. The Fab Four in China are basically the four largest EV companies, the ones that have grown from basically nothing to something in a very short period of time. Under the radar of most of us. I never had heard of these guys before, a couple of days ago. Now, the monthly sales of all these four companies have grown at a constant rate versus Tesla's far from stable monthly sales figure. Tesla's one is kind of like this, their monthly sales, it's not that constant, or consistent rather. Tesla's not consistent, choppy. You don't know whether 1 month's great, 1 month's bad, whatever. China's Fab Four is a slow graph that is healthy and upwards. And as of September 2020, the Fab Four total combined sales monthly for those four companies in China is greater than Tesla, and it's growing. I don't know what the exact stats are now, because the latest research was for October, which it was still Fab Four had greater sales combined than Tesla did each month, so for the month of October. And if I look at NIO as one example, some of the largest institutional shareholders, as of the last filing, have increased their shareholdings. BlackRock, for example, a huge investment bank, added 10 million shares on top of their 40 million shareholding. Renaissance Tech, the company of Bill Simons, the super math whiz hedge fund manager that managed to be one that can return more than anyone in the game in terms of consistency. I think 66% is their average return for like 30 years, something crazy like that. They bought 5 million shares on top of their 15 million shareholding, so that takes them to 20 million shares. The question is the smart money still buying? Well, they were buying at about 40 to 50, but it seems that they are. So, yes, all-time highs. We published this private note. I think that, let's see what time. It was pre-US Open. It was 7:59 a.m. this morning, 1 minute before UK Open. So 12 hours ago. And you can see on the note we said 57 is an important level to retest, but if that's broken, it's straight to new all-time highs. So I assume there's still a rally left in NIO shares before it cools down. Even if it goes sub 53 or whatever, well, holds 53 and above, even if it goes here, it's still in a breakout in terms of momentum. That's just part of the game. Okay. 90 billion. Yes. Elsing Jr. $90 billion. I don't know what NE is. What do they do? And maybe there's some background info. What can you advise a swing trader to do? And what are some of your resources to study stocks and be a good trader? I've got 3 videos Quantum Research have produced, and yours truly. I am. Oh, what do I think of stock tippers? This is a PG stream, isn't it? Anyways, I don't think that's a skilled way of making money. The whole reason why we do this separate 10K account live stream, like the streams and the videos and stuff, are to show that we have a minimum market cap requirement that is at least 100 million. So if I buy a stock and say 5,000 people are watching, for example, and all of them, even though I say don't replicate what I did, bought it, it wouldn't move that stock. You see what I mean? Stock tippers tip a stock that's worth a couple million, and then it moves up because people are buying it. And when you come to sell because of the spread, it drops. It's a scam, basically. Penny stocks, small caps. Penny stocks and small caps, there's many ways to make money in them. But by pump and dumping and all these rampant gangs, should we call them, internet gangs of trolls and all that, I just think that's the lowest of the low in our circles. But, you know, you do you. That's not my game. Well, not yourself, obviously, but anyone who does it, personally, you know, I don't beef. Not interested in drama. We're interested in getting the next trade on track. But in terms of resources, I have provided the link to the YouTube channel, and I'll put it back there right now. Look around the YouTube channel. We've produced 20 videos that give you a live trade example, plus the theory behind what bullish and bearish flags are, head and shoulders patterns, how to read charts from the beginning, sentiment, momentum, open, high, low, close data, moving averages, what they really are. Sam Clifton, whereabouts are you based? Are you do you see a lot of traders do that stuff where you're about? Because I assume that's the initial assumption that a lot of people have. If somebody's, you know, trading or even investing or a mixture of the two, people assume that they are some sort of guru. If I'm losing money, making money, I'm not celebrating, saying we're gonna do this, we're gonna do that. Every day has to be somewhat monotone in a way, because this is how the game works. It's not an easy way to make money. If I wanted an easy way to make money, I'd work at the tills at a supermarket, because you don't need too many qualifications, and it's not that hard, you know, lifting a couple of things, moving them here. I used to work in a restaurant, and I actually found it quite fun. I was doing 12-hour shifts. My boss and I probably didn't get along that well, but then again, it's their business, so I listened to whatever they said. It's nice to talk to people and stuff, serve people and all that, as customers and all that. But what I didn't like was that there was no respect and all that. But 12 hours straight shifts, some would go on for 14 hours. And whilst you're entitled to a break, I didn't have a break at that place. And I probably chose not to, because I liked working, liked moving, you know. That is essentially easy money in my opinion, because no matter what, when you go to work, as long as you do what they expect, you get your money. And here, you know, with a trade, I could spend a lot of time working on an idea and it loses money. Do you see what I mean? So there's no fixed wage or anything. So it's not easy money. Like with the 10K live trading series that we started about a month ago, I put in 10 grand of my own money from my investment account. So this is not all my funds, because I wanted to put an allocation where it doesn't matter if I miss out on a trade or whatever, because I have money working elsewhere and all that stuff. Because this is solely supposed to be for live stream purposes. So the last trade we closed, we've already recorded a video, and it will be out probably tomorrow or so, once I get the chance to edit it. And this account, in about a month, we've taken from £10,000 to 10,760. It's not huge money, but think about it. 7.6%. That's 1 month's work. Nice. And we haven't taken too much risk. In fact, we closed our AO World long. AO Let's Go. We bought these guys at 383.5. We closed at 405, which was a dumb idea about where is it? A really dumb idea like 2 days ago. I get stopped out the worst place. I should have given 1% a room, and we would have doubled our profit, but it is what it is. Sometimes you make mistakes as a human, eh? It's important about what we learn from them. Dividends is the easy money in the game. You have to hope the actual position doesn't tank. Also an old restaurant worker, awful work. Yeah, man. It is what it is. I now work for a research consultancy, so that's a bit weird, isn't it? And also, I'm at university, which is something that I thought I'd disclose straight up. I started trading super young. I'm not, one of these guys that turned a small amount to millions or whatever, But I started with £1,000. I built my account over the years. I think I got lucky in the early years, being completely honest. And as I grew enough capital to look at investments properly, diversify and all that, I got on to making myself a proper strategy criterion, and then I went from a list to code, learning how to code, building compilations of data that I have to first go through before I even think about placing a trade in a company, fundamental data, technical setups, all that stuff, and quantitative factors, which are that part I can't disclose because that's what I'd like to run a hedge fund by one day, which every day I am refining. But nonetheless, we move. And yeah, I appreciate everybody for coming through. We're seeing a lot of new faces. Also, shout out to the recent followers: Troll12314A, Virus J, Kartik M1, Warren Mansfield for you, Sincere Hanvat 19, and Heroin Ignacio. Welcome. It's cool to have folks from the UK as well, because we generally stream at weird times. Mostly US folks are around. But welcome nonetheless. Sam, are you new to trading yourself? Or have you been doing it for a while? I work for one in case you want to share at a later date. Is that a restaurant? What did I miss out on? Or do you work for a research consultancy? I do work for one right now as their director of finance. It's nice to be able to have more flexible hours to focus on the passion as well, and put more funds into the longer term investments, because I was used to just building my account, that kind of thing, all that nice stuff. You work for a fund yourself? Pretty cool. If you're on LinkedIn or anything, let's connect. Love that stuff. But the secret sauce, not at the moment. No, I can't share that. But I love to talk markets, nonetheless. And it's cool to see that, because my dream is to work for a fund for a couple of years, build it with a team kind of thing, and then maybe set up shop myself. But really, I'd rather just work at an established place and build it kind of thing. But at the moment, because I work and I'm also studying at university, I'm comfortable in a way of I can work on my own stuff. For example, building quantitative research as a brand, all that stuff. It's a slow process, but it doesn't cost anything. I have fun doing this and all that stuff. And now that I work, instead of at a restaurant, I work in a research consultancy, I'm able to put myself through university without any pressure in that regard. I shouldn't take money from savings, because one can put themselves through, but that means you have to take cash that you could have used to build. And if you consistently build that capital, work to gain that cash you need to put yourself through your expenses. I don't really spend much. Whilst, I could, I don't. Because I prefer to live eating what I need to eat. That's it. So that one can be comfortable later in their lives, help the family out, all that stuff, and get into the industry and stuff. I was saying, are you on Twitter or anything, or LinkedIn, if you're not comfortable putting your stuff, I can put my Twitter out there. Love to always chat with folks in the community, and this goes out to everybody. It's cool to hear how others work in a game. That's what it's all about. And for those who like that whole idea of the 10k trading challenge, well, we started about a month ago. This is a tester video, so it doesn't count towards this portfolio. But we started about a month ago. We started at 10k. We're at £760 profit, so 7.6%. Nothing huge, but we've had trades in Rolls-Royce that lasted an hour or so for a couple percent with leverage, but managing our risk amicably. Volatility, all that stuff is accounted for. AO World, where we held for 2.5 weeks, we didn't really make that much, and we got out at a bad price, but we still made money. We lost money on AO World once in 6 hours, just sitting at the desk, really frustrated because the spread screwed us over by 20 points. We would have actually been in the right standing. What else did we trade? Cineworld, that was a nice one. Oh no, that was not on this account, that was on my own personal investment account. So what else is there? The video should show. Jumia. Yeah, we bought Jumia at 20 on a clear breakout, and they went to 42 a week or so later, but we only traded it to 24 in 2 days, made about £400. It looks like we only make money, but that's not the case. We've just had a really good streak. It could be a relation of the market condition, but I don't really trade with relation. My portfolio betas is generally completely different to where the market is. It's more based on volatility. So if we have choppy stuffs, that's an easy way to make money. New to trading, says Sam Clifton. I'm on furlough, so taking the opportunity to learn some more. That's great, man. I've got a lot of friends who work at restaurants and stuff that are on furlough. Some aren't, unfortunately, because of how tough this sector is struggling right now. But in terms of the fact that you're still getting paid and you're not needing to use your time, it's great that you're spending your time preparing to try and learn a new skill. I think if you like investment or trading, that kind of thing, I would suggest consuming as much investment related material as possible. Now, let me try and pull up a file without pulling up private info to the place I work for, because that's a file next to where I store some books. Let me see. All right, boom. These are just a couple. Boom. Okay. These are just a couple of great books. Nassim Taleb's Black Swan. Great for learning a little bit about recessions, all that stuff, and one-off events that cause huge shock. The pandemic, the coronavirus pandemic, was literally happening as I was reading this book. And I had a short bias in airlines back then. I didn't buy them on the bottom, being completely honest. I did have a trade after the bailouts, or just before the bailouts. And the same with the vaccine on Carnival. But I didn't really buy much on the way up. I did go short pre, and that was more a macro environment of growth slowing down, as opposed to, and a horrible business model. High beta, horrible business model on 2E. I still think it's a horrible business model. Seeing them down today almost makes me smart. No, I'm just playing. It's never nice to see something lose value. Stock Traders Almanac. This is a good one. Get it in updated years where you can look through trends of just seasonality. This is not how I work my system, but it gives you creativity. When I close my eyes before I go to bed, sometimes I get ideas where I jump out of bed, turn on my screens, make some notes, make some spreadsheets, type up some code, all that stuff. Let's see what we can pull up. It's absolutely beautiful, this one. Oh, the worst weeks by percentage across different indexes. All this stuff. Dow Jones Index, best and worst year for January's, best and worst month, years where you've had it on January kind of thing. all this stuff. So much. Down January, S&P closes to low next 11 months. It's just so much data. Absolutely beautiful. Elections. Trump's almost like... No, Biden winning's almost like Obama, if anything, in terms of the market. But then again, Obama inherited a recession, so he had a bit of free returns, and then still had a great bit of growth. It's not the president that makes the stock market rise or fall. Some policies. Stimulus, albeit. When the US election was happening, everyone was like, either the market's going to go up or it's going to go up. Files are easy to find, luckily. Sam, if you've got an email right now, I'll email some of these if you like them. Maybe it will be something that will help the process. I think I'll make some videos as well to maybe track trading data and stuff. I have these downloaded myself. These aren't the ones I use now, but these are some old ones that I really think are just gems. I always keep there in case. Also, if you've ever heard of Meb Faber, Mebfaber, he makes some great podcasts, but also he has a couple of free books on his site where he talks about global asset allocation and returns. Let me show you this beautiful spreadsheet. It is called Portfolio Returns. Oh, this is not from his site. This is something I've adjusted myself, but I could only get 2016 data for some reason. I'm going to put it up on the screen in a minute. And just to double check, I have seen the Twitter posted. Elsing Jr., you're on Twitter at Mr. Substance, right? I'll follow you if that's that. Okay. Oh, and the reason of the 10K series, if anyone's wondering, is in 3 years' time, we want to show that we can build it. That's how simple it really is. It doesn't take that much work to generate wealth. If you put your money to work, even if you lose in one go, you're at one point going to be able to still grow. If you keep trying to improve yourself, think differently to the crowd. If you think the same as everyone else, buy Tesla now, go ahead, be my guest. I would not suggest doing that, but I wouldn't suggest not doing it either, because I'm not qualified to give financial advice. I just be careful in doing everything everyone else says to do. Oh, buy NIO, buy Tesla. Amazon's looking great right now. Oh, Apple. Oh, I like Royal Mail stamps, so I'm going to buy Royal Mail shares. It's not how it works. It doesn't work like that. I'm trying to find this spreadsheet, though. It's a really beautiful spreadsheet. There's also an ETF one, but I'll save that for a later date. This is... Look at that. Daily Dow Jones point changes in 2016. Whoa. Down Friday, down Monday. It's so cool how all of this is just there. You see, down Friday, down Monday almost takes up half of these. And then Tuesdays, Wednesdays, Thursdays, fairly equal distribution. There's two spreadsheets I'm going to show you guys. One simple one for tracking stock prices that I made a while back. This is quite sweet. IIVI was a one that I regret not getting into. They were like $30. When I wanted to look into them, I didn't get the chance. Okay, AOL's not in dollars, but I've just put them all in dollars for US stuff. Square. What's that company? There's a payments company that's going to IPO soon, and I really like the look of it. I don't remember. But look, nice little spreadsheet here that can track a little graph of, say, 3 months moves and all that. Price low, price high. Instead of having to go through pages and pages. Look at that. So Alibaba straight down over 3 months. Which other ones have not done so well? Amazon somewhat lagging versus Berkshire Hathaway, Google, Apple, Visa, Canopy Growth, Chipotle even. Whoa. The Vanguard S&P 500, I think that is ETF. Yeah, that's done well. FICO, SSNC, KLA, Zendesk, MKS Instruments, and obviously IIVI that we liked. You dive deeper without having to pull the chart for every single one, have 100 screens at use. And look at this cool spreadsheet. I'm going to pull up two. 1 second. This one's overdrive. It looks at asset class returns since 1972 to 2016. I just took an average of 1 year after the crisis because that would be excluded just because that year had huge returns. Already 2010 had decent returns, but that skews your averages. So I just looked here, kind of got fair returns for US value, large, total US, real estate investment trusts, REITs. They're quite strong. What else? Energy, that doesn't seem to be that great because it has way too many big down years because of the financial crisis kind of vibes, and also oversupply, OPEC failing to stay in its lane, or a couple nations in there failing to stay in their lane. Global real estate investment trusts, not that great. Global property doesn't seem to win, but US property, UK property has done quite well too, but I couldn't include it here. This is mostly US related. International bonds, corporate bonds. To get these kind of returns, think about it. In the UK, if you put your money in a bank, you'll probably get less than 1% a year. Inflation in the US, I know, the UK it's about 2%, let's say, up to 3%, down to 1%. So on average, let's say 2%. In the US, it's about 1.5% for those 2016 back to 2010. So that's 7 years of data. You can see US small caps have done quite well. Dividends. Internationals, not so great because it includes the ones that have negative real returns to a significant degree in dollar terms, let's say, because the currency becomes so worthless. So when you buy it in their own currency, it becomes worthless in your currency because your currency stays strong, theirs weakens against yours, and they get inflation. So in Iran, for example, it's not a market you can actively invest in, but £1 used to be 500 Iranian riyals back in 1971 or 1972. Now £1 and the government rate is 50,000 riyals, but in the black market rate it's about 300,000 riyals. So see that year by year compounded inflation, weakening of currency, where if you don't keep your money working over, say, 20 years, let's say 1.5% rate of interest equals, you have £10,000, you times it by 0.985 to the power. Does it work on this stuff? Yeah, to the power of 20 years. So your £10,000 would now be, I should come here, 7,391 pounds, or dollars or whatever. So by keeping your money in a bank account, whilst you're not losing in actual terms, your money's more and more worthless as time goes on. That's the main point I was trying to make. Quality is not great for the win. What do you mean quality? As in quality of trading 212? Hey Sam, clifton@gmail.com. I'll send them to you right now. In fact, I'll send a couple of them, and if you like the look of them, you can download. If not, don't worry. is a, I don't know if they're paid or whatever, but you know, I'll send you. Let me find it right now. Got a couple of messages in the chat. Right. Also, if anyone hasn't already, we're also live on YouTube as well as TradingView streams. I have one too many tabs open. Get rid of that. Way too many tabs. Are we still running? Whoa, it double screened for a second. Okay. I'm just going to put that link in the chat. You were talking about the video quality. Oh yeah, because it's a huge spreadsheet, isn't it? Are you watching on Zoom? Not Zoom, sorry. Are you watching on TradingView? You are watching on TradingView. Yeah, that's not my fault. I don't think we can adjust quality on TradingView. It is in beta. But if you want to switch over to YouTube, which I'll give you the link of right now, feel free to. We're also there as well. I'm just going to make that email for you, one sec. And send a couple of those books. What are my thoughts on Apple? Quality company, decent cash position, but how are they worth roughly $2 trillion? Soon. New phones. First phone came with earphones. Second phone, they took out the earphone jack. They gave you little dangly things to put in your ear. They call them AirPods. And you always end up losing one of them. What a great business model. But the fact that they charge so much, people have fallen in love with the brand, is that I'm pretty sure they took it like a 10th of revenue on top just from selling AirPods, or even like a third. I don't know, it was something crazy. Thoughts on crypto? You know what, yeah, anyone that appreciates fundamentals wouldn't know. But what I would say is, on the topic of inflation, in some countries in the Middle East where there are weak performances in economic terms, right? Where the economy isn't doing so well, people don't like the currency because if you keep it in the bank, yeah, you get 20-30% interest, something like that. But your currency is depreciating at a rate of 60% a year, kind of like reducing balance method on an accounting kind of thing. So assume you times it by 0.4 to the power of however many years. Not even that. Because say £1 was 50,000 reals, then the next year it's 1.4, it's 40% weaker, or 1.6 if it's 60% weaker. So essentially it rises exponentially, the cost of you switching your money outside from that country. Now, people back then, I was actually visiting Iran because I have family there, just before the COVID pandemic kind of broke out. And what they used to do was they used to buy gold. The government set the exchange rate at £1 equals 50,000 reals, right? R-I-A-L-S. 50,000 Iranian reals worth a pound. £1 British pound. Now, what happened was people were not able to exchange more than about £1,000 per person, and some people had kids as students abroad and all that stuff because there was some struggle going on economically. So what happened was a black market formed where a rate was so exponentially higher to the point where like £1 could be bought at 300,000 reals. So essentially the currency was getting more and more worthless, and if people were pricing gold to sell gold at like a, I don't know, jewelers or whatever, or the people who sell the bars, bullion dealer or whatever, they were pricing it in the black market rate. So if you come in and you buy at a government rate, say you can't find a place to get a black market rate, you buy in with pounds and you get, say £1 gets 50,000 reals from the government's like set rate, the law, and then the black market price, everything is priced at the black market rate. So everything is 6 times more than what it should be. So let's think about this. You're buying £100 worth of gold. In reality, you're paying £600 for it. Something crazy like that. So people stop buying gold. Because even if, yeah, they probably make money considering the inflation and all that stuff, but they wouldn't make easy money. In fact, they give up a huge amount just to buy it in the first place. It's like to buy something, you're taking, 70% real value loss right down, which just wouldn't make sense. So then Bitcoin was something that everybody started introducing. There's a thing called Tether, and that it's tracking the US dollar kind of thing. So 1 Tether is $1. $1 is roughly 1 Tether. Tether's a little bit weaker, like 0.97 or something like that. And they found a way. A lot of people were doing transactions. There was one guy I knew that said he was like trading crypto and stuff, that they did. The one company asked for $2 billion of crypto to be bought using roughly like Iranian currency or something like that. So these individuals who aren't comfortable with keeping their money in even gold under those conditions, but also the cash is the worst case scenario. Gold is a little bit less worse, or a little bit better. I wouldn't say better though, because it's still crap. But then buying Bitcoin, if the currency depreciates by 60%, your Bitcoin is now 60% more valuable in reals terms. Incomes didn't increase at 60% a year, much less. And the cost of buying things and stuff wouldn't have increased by 60%, also 30-40%. So by being in something that directly tracked the US dollar, you were essentially making money like crazy in domestic terms, say in Iran. So folks who got into crypto and now who are making a crap ton of money are absolutely balling. Now, I can't imagine how many other countries there are who have similar problems. In South America, for example, Venezuela, remember we heard about the Petro coin? That didn't work out. They still must have been buying Bitcoin. You'd be surprised. People you'd speak to on the street know more about Bitcoin than domestic legislation or something, that you should know a lot more about your own country or whatever. Please write some of the titles of your books. Okay. These are some free books. They're out there. I'd look at any year's Stock Trader's Almanac. I'd look at Nassim Taleb's Black Swan. Tail risk hedging's too complicated and too mathsy. So is quantitative risk management, so is that. I'd look at those two. And Meb Faber does one called Global Asset Allocation. But here's the thing. If you want to start with charts and stuff, I've made a couple of free videos. Straight to the point. Let me show you one example. Moving averages. How we should really trade. Because I'm not fully a technical trader, but I think TA trading is very, very important. You need to know how you calculate these lines that are looking on your graph. You see a linearly weighted moving average. You assign more weight to recent price data. You can see that. This is the formula. I walk how it works. I give an example. Price data, exponential moving averages. Why do they end up sticking closer to the price and help you with stop losses or take profits or whatever? Now you can see breakouts, all that, because they give more of a weighting to recent price data. I've made these videos along with the quantum research team, and look, I walk through anything: SMAs, EMAs, WMAs. And real examples, say the Dow Jones. Look at this. The 21 EMA is obviously more sensitive. The 200-day simple moving average. So this is literally just adding up 200 days, dividing it by 200 price points of data. And then you get that moving line. And it's rolling. So next day, you push it forward by 1 day and you have 200 bits of data. This one, you can see, works as a good line of support. 2011 on a weekly, each candle represents a week of trading data. You can see that 200-day moving average was surprisingly a good line of support. And if you want to go further, you don't just use random lines that fit, because that's very dangerous. You shouldn't just fit things and be like, okay, yeah, I'm gonna go long because this fits. It looks like trying to be an astrologist. No, don't do that. Backtest, whether it means using inbuilt platforms that actually do it for you, or learning to do it yourself. So if, for example, price is above this and then you cut when the price is below this, how much would you have made if you did that every time that happened? And you do the simulation over 14 years, let's say, of this price data, and then you say, okay, I'm going to go from Dow Jones to an entire sector, all the stocks within that sector, and see, get an average at the end, well, a weighted average, something that's more reliable than just adding them up and dividing them by the amount you have, and then see which ones are most reliable, rotate regularly. So you could be on a, I don't know, a 12 EMA, then 21 EMA, 6 EMA, something like that, 100 and whatever EMA. Something not too crazy, but not too small either. You need enough data to then create a system of it for getting your right entries, cutting your losses, or reducing size, adding size to take some profit, or take some money off the table and de-risk a losing position, all sorts. Now, this also shows, you see the exponential moving average, 21 week rather, sorry, not 200 day, 200 week moving average this was, that seemed to hold well. This is the 21 exponential moving average, 21 week exponential moving average, this one. So it seems that if you have a crossover, that is quite a bullish sign. You'd be buying at the point of crossover, where this crosses over here. That would then continue higher, surprisingly. Well, maybe that's a good sign. You have a cross under. Back when we back tested this on this basis, these time frames, you see a cross under, that was a short signal, because look, this crosses under here. On a retest, you'd probably look to go short, and what, from 1100, in the crisis, yeah, without looking at any fundamental news, your system would be saying, okay, look, you've got a fair bit of downside, and ride it down to here. So you see it didn't test here at all. It did here at around 8,000. So you'd have made 3,000 points on the index by literally following a simple back-tested technical analysis strategy. It doesn't work always, but when it does, look at that. 3,000 points. Your risk, I bet, would be 500 points, maybe 6, 7, let's say even 1,000. It's still 3 times reward, which is amazing. Now, there are all sorts of indicators you could look. Look back period is the bit that I said, 21 exponential moving average. This one's 55. These are random numbers you think, but then if you put them in a spreadsheet from 1 to say 200, and then you come up with a system that develops, or identifies rather, which ones are best in which sectors, and do a sample across many months, maybe extend to years, depending on how comfortable you are, then you'll be able to go very far in terms of analyzing assets without doing too much exhaustive brain work. And then look at what I do, for example. So I've created lists of UK housing real estate investment trusts. This is Unite Group, student property. Look at that, similar graph. GCP, student property. ESP, similar graph. CSH stands out. Oh, and they are breaking up. I'm happy to see that, because I have a holding in these guys, and I've been holding them for a good while, about a couple months, but I have them on my own investment account. Now look at this. Their price action is different to these three, because these guys get money regardless of COVID. In fact, they're doing better because their revenue, their rental income, real estate investment trust rental income, is indexed, which means every year, because of inflation, they get more rent money. So they can pay their dividend, they get capital gains on the property as well. And it's likely that this thing will grow better than these guys that might not even get some rent, might have to pay some rent back to some students, and all that unfortunate business. Just gonna check the chat real quick. Okay. May need to zoom. Generally, the quality is quite strong, so I think it's probably difference between YouTube and not streaming on YouTube. Okay, so I was gonna send the stuff to Sam. Let me find that. I hope that stuff worked. Those TA videos are crucial if you guys like that kind of stuff or want to learn it. We go through it. They're all free, so beats paying someone to potentially not learn anything. Learn it from someone who actually trades and doesn't charge you for it. Because if you can't afford to pay for something, why would it be fair for someone to charge you for it? If it's info, that should be free out there. We made it. These took us lots of hours. Think of how many examples we had to do. Edit the videos, make them clean. Make sure that in one go I could speak them through. Sometimes edit some parts together, all that stuff. It's beautiful. Absolutely beautiful. And although they're not popping off that much, the few views that have been on there have had a really nice responses, which is super cool. Especially this one. Every single candlestick pattern that you can think of, shooting star, well, everything really, everything, dojis, whatever. So I'm gonna send Sam Clifton books. That means I can have the weekend to relax a little bit. Nice. Well, not relax, work on new ideas, if anything, but that counts as relaxing. Work is chill. Love the people I work with, by the way. Amazing folks. It's really nice to have kind peeps like that around. Professional. Chill. Okay. The books. Sam, I'm just finding the books for you. Black Swan's a great one. And the Almanac, yeah. Also, my best reco is Mib Faber's books. He's got 3 books on asset allocation. Smiley face, Ryan. There you go. Sent you those, man. Hope they find you well. Alrighty. Is everything working smoothly? Let me just try and hear myself in the back. Also. Alright. Yeah, so the shares of Alibaba seem to be holding up. Shame for us. These shares are up by a pretty penny. I so want Enquest at 12.9. That's like easy money. What's this? 5-minute digital hundreds. Right, click on market name. Okay. Grey markets used to be fun, but it's just 3 companies. TikTok. What's the market cap? Well, they're not actually traded, by the way. This is just like a thing for my broker where they make like a private thing. Look at that spread. 183201. And you don't actually own the physical shares, so it just doesn't make sense. Messy stuff. I've never actually properly looked at the things I don't open. Politics is... yeah. Trending ETFs is always cool to look through. I've got some of these. Oh, and also, this list of housing ETFs is super small. Have a look at the tech ETFs I have that I've compiled. I don't own all of these. I probably own 3, I think, from the last time I checked. Yeah, I had 2, and then I added to Exponential Technologies, which is this one. Sorry, XT. This one, yeah, the XT one. This is what I added to recently for an investment. And yeah, look across fintech. I don't like fintech of all of them. Video game tech. Where's the Roundhill one? I'm pretty sure I've put them. Oh, cloud computing ETF. This one's a great one as well. Yeah. Everything is on a tear. Look at that in tech. If I go to the beginning of the year, yeah, year-to-date returns. Look at each one. Boom, boom, XT. That makes me smile so much, this one. Look at that. Wow. And all of these have different sets of holdings within them. And you buy this and it's basically like having access to a fund full of this particular area. So instead of buying one stock and banking everything on it, buy multiple different ETFs in quality rotating sectors. The ones that are winning, you should be in. The ones that are losing, you should cut out of. Well, not that simple, but you know what I mean. Artificial intelligence. This one's a banger too. Oh, I should probably disclose that I have exposure to that one. But semiconductors, all that. I have specific companies semiconductors exposure, but I don't own this. But it's interesting to see that this would have given me a better return than that one company I held. Quite cool. Clean tech's gone crazy. I'll switch actually. I know thingy's not tech, but TAN ETF. This thing, the solar ETF. Look at that. At lows, $21. Now, $118. Just buying clean... No, not even that. Solar energy companies. What? This is how the market really moves. If you look at 1 or 2 stocks, you'll miss what's really going on. I focused on a couple of stocks whilst this major move was happening here. And whilst I made a bit on my shorts on the airline sector, most things fell down. All that stuff. Airlines fell more than I expected them to, so I was like, okay, I'll close the majority of these and add to my quality ones that got hit. The one in the airlines, but I thought were still growth companies. And then, whoa. I missed this. Shame. Print. This is the 3D printing ETF. Whoa. What the... What's been happening there? It's an ARC ETF. No way. I'm going to miss that. PRNT. I need to look into their holdings. Because there were 2 companies that I was looking for. Proto Labs is at 183 and is it Materialize? Wow. Material. It would have been at 40. Yeah, it would have been at 40 or something recently. Wow. 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 I got a friend in Materialize. That's cool. I'm going to message her and congratulate her. Oh, wow. Let me send that picture. Whoa. It's a rocket. I didn't know much about that company. That is a... Indeed. Where is it in 2 days? 61. 20% in 2 days. Well deserved. She was in when I first got started working, so it was, yeah. Wow. I was doubled in 2 months. Congratulations. Nice to see your friends winning. Damn. That was like a large element of their portfolio. Oof. Please can I have those books too? Yeah, sure. I'll forward the same email actually. Wow. Arc is just, the website looks beautiful. I actually do think 3D printing's the future, I'm not gonna lie. But at these valuations, 3D Systems Corp materialized 8 billion value. Proto Labs 9 billion value. Renshaw. This is melt up phase. You can't say anything else. Look at that. Everything basically is up. Block. What's this? Blockchain. Wow. Blockchain leaders. What's in the blockchain leaders ETF? Don't tell me they put like a bank or something. Blockchain leaders ETF. What? This is block. Marathon patent. MicroStrategy. Square. Hive block. Don't tell me Hive's publicly listed and I've completely forgot about this. Huh? Is this the right one? Well. Wow. You see, this is beautiful, just seeing all this stuff. I think I haven't done a podcast in ages. I don't know what's been going on there. I will get one out soon. I think I've been doing a couple of live streams, a couple too many live streams to even get the chance to do any of that stuff. And it's life outside has been a bit busy. Wow. Really impressive. What would you do if you made 100% in a couple of months? What is the site I'm using? My pleasure, Boomedine. I will send it through. I got distracted there. Sam, the site I'm using right now, what, as in like what you're seeing here? TradingView, isn't it? If you're asking about my broker, I wouldn't recommend it. First of all, because I'm not getting my bag, bro. Clients costs up to $1,000 per person for brokers. You know that in terms of marketing expenditure. You can't just get free. You know, they're not. There's. Let's be honest. It's a. You know, everyone needs to eat out it. But I recommend use whatever you're comfortable with. I'm pretty sure these guys have a demo, but I haven't used it enough to know whether it's better than the other ones, because my biggest mistake was I started cash and I used a broker called AT Online that back then they did it had brokerage accounts for people with like lower account values. Now I think it's like 500k you need to start. Bear in mind I started with $1,000 in 2013, so they literally, I assume because everything was perfect, I got the best prices, I would even call them and they'd sort it out for me and all that. I don't know how they did it. The broker I use now, it's not so great. It's always a little bit different to where I put my order to close or when I press close. It's always different. There's no 5-second quote, none of that stuff like I used to get. So I'd investigate what works best for you. Cosmos. Cineworld, Jet2. Where is Jet2? because I was investigating a short back. Yeah, here. That's so mad how I was so on point, but I didn't get it. And that would have been a... What? Yeah. That's crazy. Yeah, that one hurts to think about. But nonetheless... Excuse me there. That hurts seeing Tesla so high as well. Look at that. 880 closes right on highs. Wow. Elon Musk is not just the richest man in the world, but now he's just, at this point, he's just being richer and richer. He don't care. Hey Mike Tamio, how you doing? Things are all good around here. We were looking at a couple of ETFs. So I was looking at the ARC 3D Printing ETF, which has just ballooned. Let's look at, is that a nifty tool? Look at that. $14, $15, $16 to 36 from lows from year beginning to now. You'd have made at least 50% just in 3D printing stocks. And these are the main compiled lists of them. 3D Systems Corp, Strategies Limited, Materialize, HP. HP is a weird one. Proto Labs. Materialize and Proto Labs are the main competitors. Materialize has gone crazy. Look at this. What? A friend of mine was talking about Materialize. What is this one? I think when it got work was around, yeah, here, so 42. And now it's 70. Market's just closed in the US, I'm guessing. A couple minutes ago, yeah. So that's the juice. Also, if you haven't already, please do subscribe to our YouTube channel, where we've got all sorts of content like this free. And we've done this 10K trading series where I've put £10,000 of my own money in a trading account. And in about a month, we're up to 10,752. And the reason why I did this, instead of trade all my funds together, invest all my funds together, first of all, it's tax efficient to put money in an ISA. But in here, it's cap gains tax. And then you pay the bit that's above. You have the sufficient allowance, so it's not a big deal. Does get quite complicated, but anyways, also I can show without taking any money out or putting any money in for the next 3 years what we can do with this. It's not expected to be something super huge, but we show the real world of trading. You're not making huge amounts, losing huge amounts regularly. You're playing the game. Wow. Yep, my friend was in there. Well done. Was in Materialize. I didn't get the chance to look into them further. The whole 3D printing industry looks beautiful. Look, multiple comps, Proto Labs. What's the other one? 3D Systems Corp, Strategies, PTC, Trim, PTC. What's up? Appreciate you, Sam. Big respect. And if you guys haven't already, make sure to follow us on TradingView. In order to do that, all you got to do, check this out. So you go here on TradingView, and you'll see, if you scroll down, a little follow option for Quantum Research. Because we're generally live quite a bit. I'm going to put this ink trade idea anywhere between. I don't think I'm going to get the Enquest trade considering where oil closed. Tesla at 880 though. To me, it has one last up. If I'm really going to try trade short, it has to be after it breaks 1,000. And then a reversal back to here. It's not enough money though for the risk. That's the thing. Now, when a stock is in a crazy breakout kind of territory, unbeknown to humankind why it's valued so highly, it can be like that for a very long period of time. Hey, I am Super Trader. Hope you're having a wonderful day. Welcome for coming through. Yeah, and with the series, we're totally transparent. So whether I lose money or make money, I also make YouTube videos that last anywhere from 5 to maybe 10 minutes or so. That show things that have happened over maybe hours, days, weeks. So we had a trade on Jumia where we made £402 on this 10k account. The Cineworld was just a casual one on my own because I trade larger size on my other account. But that, I can't just be live streaming and all that. Generally, I'm all about when I'm researching and trading those things. But when I'm at the desk, this is what we use this account. And it's entertainment. I guess a lot of people have liked it, DMing us. You can see the views as well, at least 1,000 on each. The educational ones haven't got as much, but they took a lot more work. They're higher quality. They actually show you what real technical analysis is in trading with real examples. As someone who trades real money, as most surprisingly don't these days, most use demo accounts and say they're up a crap ton of money. You know, this is more realistic. We don't have huge swings. We have losing days. We have up days. We're doing all right for now, but normally I don't have streaks like this, so I've taken a couple of days to cool off. Make sure my ego doesn't get ahead of me and bring me down. And yeah, today's session's obviously done. We've just been researching ideas. Look at this. Tech ETFs. Whoa. All the stuff you can imagine. Cyber security, innovation and prices. US tech, all of these. Look at them. The trend goes for tech in general. The majority rises across the board come from tech. What about Asia Pacific? These are a couple different countries. Thailand, EWS is Singapore, EWM is Malaysia, EIS Israel, Hong Kong, China large cap, that's it. Kingdom of Saudi Arabia, ETF, Pakistan, what's the next one? Vietnam, EWI, Italy, there we go. I don't know about Ian, said L. I remember the ticker for that. New Zealand. We can see there are some variations, but generally everyone is almost melt up mode. Come out of a crisis, buy, risk on. Imagine looking at this. Everything is rising. Where is their value? Well, the irony is they can only ever go higher. Well, not every country, but the quality ones. It's just Tesla at almost $1 trillion valuation. I mean, if you're making money, you're making money, but I'm at the brink of pulling my hair out. It is what it is. I don't think I've forwarded the email, which I will do now. One sec. Couple bad vibes. Okay. So I'm going to send this to Boomidi Ignatius. Forward it from Sam Clifton to... There we go. Those are those two books. Here you go. There we go. Okay. Well, there's 22 folks here. Welcome. We're just looking at Asia Pacific ETFs, and now we're going to go to what industries are not doing well. Well, coming out of a recession. Gold miners. in general, gold, shares, vectors, miners in general just don't do that well. And to understand why they just do so poorly over time. Agriculture, well, natural resources, that's essentially energy. Shorting crude oil would have lost a fair bit of money. What is this? Oh, from the lows. Yeah, this is an inverse instrument. Commodity Index Tracking Fund. Look at the way commodities have ripped on average. What are you talking, 20% in a couple months? Crazy. Time goes by so quickly. Silver today had a huge drop, almost 7%. That is probably it for silver for the next couple of months. Maybe back to $20 an ounce. Or base here, yeah, just over $20, $20.50. Uranium's gone crazy. Wow, 50%. I bet you got these uranium small caps doing well. Same goes for just natural resources in general. Platinum. Whoa, platinum's actually up 20%. Commodities. So gold and silver are the protection ones. Platinum, a trust here. Still up. Yeah, 20% for that whole period. Look at this. We're showing you the whole world and what things are looking like right now. Basic materials. MOO. Agribusiness ETF is called MOO, like the cow does. VAW, Vanguard's materials ETFs. Global agriculture, closest split for the first trust one. Invesco. Base metals. Base metals are doing okay. Look at this. I'm showing you everything. The whole world. This is timber and forestry. Agricultural products. These are different compilations sometimes when they're the same kind of areas. Small cap metals. Materials, sorry, not metals. You'd have made 50% across basically the main outperforming ETFs there are there. Tech, oof. Maybe even more. Ooh. So we'll look at mid-cap oil and gas. Premier Oil is going to go soon, so they don't count. Tullow. Looking healthy. Yeah. That's prime for another break. Literally in probably a session. CNE. It's breaking out. 50-point rise. 35%, something like that. Shame Premier's not going to be around anymore. All of these lists I've made myself, so I don't think there's any resource I could recommend. But it's just from reading, and gathering the right databases. Latin America, how are they doing? Very good. Very good. Very good. Colombia. Argentina. Latin America as a whole. Mexico. I want to see what Mercado Libre is doing. That's a huge tech company in Mexico, I think. What? Doubled. So pre-COVID, 740. 408. Loads of COVID. Now it's 4 times. Where's Shopify? Pre-COVID, doubled. This stuff's messy, man. Messy for real. How do I see Dropbox? Is Dropbox about to IPO, or are they already here? Yeah, they're already here. Well, it's just no attractive price action. It's one of those spikers. I mean, range 22.8. Well, it's weighted towards the short side because if you're going long now, really, you only have $1.50. If you're going short, lower range, gives you about $3-4. So if you're going long, risk reward is weighted, but depending on the probability, that's important. How come certain ETFs aren't available on your broker? Well, if you use Trading 212, that probably makes sense because sometimes you don't even physically own the shares and stuff. I would use some place that charges a little bit higher fees, because you'll have money coming in. You said you're furloughed, right? So if, let's say you're a student and you have £400-500 coming in a month, that's probably fair. Live with your parents so you don't pay any fees generally. A couple, if you go outside, obviously that means you save less, but if you do and all that, take 100-200 off the top. That amount you save a month, build it, direct debit it, and then build yourself a little allocation into where you believe the fastest growing sectors are, based off data, personal comfort, risk levels, whether you're aggressive on risk. So if you're aggressive on risk, you would have risked whether solar tech did really well or did horribly, and it did really well. Tech is relatively aggressive risk. Peace is more just buying an index tracker like the S&P 500. Nasdaq's a little bit more aggressive on the less like willing to take risk on particular companies. Can't even go to sectors, but hey, I'll go with the whole index of like basically the tech sector, because that's relatively safe. It has the highest quality companies. A company's largest index generally has the highest quality companies, FTSE 100, etc. All that stuff. How to trade Arun Saxena. We've got one video about that, actually, under our How to Trade series, but you need to know the asset classes. But I'm not someone that could teach you exactly that. All I would say is check out these free videos. They might help. YouTube channel link is here, and if anyone wants to subscribe, support us that way, that does the best amount of support that you could ever give us. How many MA do I have? There aren't just MAs. So in this one there's 3 MAs, so simple moving averages, 2 EMAs, and just volume on the bottom bit. Oh, and another MA, so 4 MAs. And I rotate. My pleasure, Arun. Hope you're having a wonderful day. Guys, I think... Oh, thanks for not forgetting. Thanks a million. Boomerdine says, my pleasure. You guys, I am trying to make sure that as you guys are spending your time watching the stream, I'm creating as much value as I can as possible for you guys, because it's more appropriate that we all make money, get some good trade ideas and all that stuff, have a little bit of fun, reflecting. This is like a drink at the pub kind of vibe, you know, whether you drink or not, coffee, something like that, but over stream. You know, you guys, I bet you, for those who trade, when you're sitting with your normal mates and stuff, your closest mates, when you're hanging out with them, when they talk markets and all that, you have that feeling inside where they never really get what you're talking about. Now, the point of these streams is to also show a bit of entertainment of me losing or making money. Now it's chill, sessions are closed and all that, so we're just looking at ideas. I'm looking around the world, different sectors. This stuff normally I do on my own, but I think it's huge, of huge value to anyone who's new to trading, but also those who haven't looked beyond a couple of stocks or their own market. Look across the world, outperformers, underperformers, and the like. It's just a chill vibe. You're from India, there are less people who use MA. Big up the Nifty 50. Love that index. In India, of course. There are less people who use MAs. Yeah, what do you whenever you trade on a business of MAs, you lost. I understand. Where do you see your YouTube channel niche? Well, I have a podcast where I literally talk about investment ideas, ETFs, certain just things that I'm comfortable with. Yeah, I've heard of conversational money. I think someone mentioned it in another stream as well. The YouTube channel niche as well. I put up a certain amount of money and I trade a live account, a real trading account, and I'm someone who actually has traded for a very long time and doesn't just look at a Google graph and say I'm going long, but actually backtests heavily. But when I'm trading, it just looks like I'm using a chart, which is the great thing. It's entertainment, I guess, because there's a lot of US traders that do it and stuff, but in the UK, beyond Forex and stuff, you don't get people trading shares. So imagine you see, I don't know, Rolls Royce making £173.46 trading Rolls Royce. That may look clickbait, but that's exactly what the result was. Look, let's click on it and let's show exactly what happened. So these are a little bit higher quality, obviously, as you can tell. This is when I open the trade. See that? I'm pretty sure. There we go. Boom. This is my plan. These are some numbers, targets. It goes 114. The progression of the trade. Look at the moment we close. My stop loss is there, 114.1. It's 114.05, so that should obviously hit. So I refresh and check because sometimes my internet's not great, especially when I have all my systems running and everything. So yeah, it cut me out, and I want to see where I'm cut out. I'm cut out at exactly where I want it. So yeah, that's good. So that 173.46, it says here 193.46, but actually there's £20 of fees. So I pay quite a lot of fees, but you know, it's fine. It's not a big deal. Yeah, so I've even accounted for fees, which is quite unnecessary, but it makes it more realistic. And still, people seem to like this. Losing £45.95 in 6 hours. Yeah, but it's in 5 minutes. 1 hour. This was over 2 weeks. It was 9 minutes. 5 minutes. You see what I mean? Cut those little bits. And there are trading videos I've made to talk about technical analysis, like huge examples, high quality stuff really, just for free. We don't make money from this particular bit. We're working on a report though, on multiple different asset classes. Basically, you see the kind of stuff I'm doing here, compiling, but with more elements of my system that I'm comfortable with disclosing, but I haven't yet talked about. And that will be basically graphically interpreting what is a long, what is not, and we'll make them affordable. Like each report will be weekly on a different asset class, indexes, stuff like that. Indexes, foreign exchange, cryptocurrency even, addressing for different markets. And each report will be once a week. So there'll be, I believe, 3 or 4 reports, depending on when I finalize it, a week, with basically graphs, trade ideas, levels, all that stuff, where next, all that. And that will be once a week. So essentially 3 reports, let's say, just in case the 4th one doesn't work out. 3 reports once a week. So that's 12 reports a month. And it works out to be £10 a month each report. So if people get 3, that's £30. No, 4 reports. Sorry, my bad. 4 reports. I completely forgot about one. I'll show some samples soon once we finish with the site. There'll be like £40, less than £40 a month for 12 reports a month. So essentially it's like £3.50, and each one has multiple different trade ideas. And to buy a position, for me, it costs £10. To sell it, it costs £10. So it's basically less than a commission for buying the trade itself. So that stuff will probably launch soon in terms of the business plan and all that. We want to put every penny that is generated from that into a Quantium Research Fund that we don't take out of ever. And anyone who's a part of the reports will also see what we're buying, what we're selling as investments, all that stuff. So it's kind of like a fair enough deal of information, all that. I think it's personally underpriced, but I think you shouldn't charge people who can't afford it. So if everyone can afford it, it's universal, you know what I mean? But anyways, off that stuff. I don't want to plug myself too much. We're just here to talk markets. And yeah, by the way, when I was talking about the podcast, that has more than 70 episodes out today. It's been about a year and a half been doing that, check it beyond these videos and all that stuff. There's fundamental analysis videos too, asset classes, all that stuff. Nice colors, by the way, eh? The last podcast wasn't this one, it was why I might be buying Alibaba, but that didn't upload because I need to fix something. COVID-19 shut down on small businesses. One I really liked, I did an interview with a girl, she's actually called Beth B, one of the channels we're subscribed to. She had cancer and yet fought that cancer during her A-levels, got good grades, got into a good uni, now started up her own business. And she also runs a really successful YouTube channel. So big respect to her. She deserves every bit of success coming her way. And it was a pleasure to interview her, which was real cool. New style of episode, but nonetheless, super fun. And we're looking forward to having a lot of writers on our site as well. We've already had a couple of people in talks to add a lot of new articles. And that kind of stuff is a cool one too. And to monetize that stuff, you know, ads and all that, structures, sponsorships, everything like that is generally where you go. So you don't need to be forcing things down your dear users' throats to make money, you know. And that's the beauty of it, doing something you love, which is nice. But anyways, I think this session, 21 of you guys, big respect for every single one of you. I hope you have a wonderful day. Oh, we have Sam. Are you Sam from the other side on the YouTube chat? I just didn't look at that, my bad. Super interesting. How much time do you dedicate a day to trading? Well, I research whenever I feel like I have the inspiration of something. It's like, I don't know, it's almost like a lucid kind of thing of I live, breathe and eat this kind of thing. Like I'll be doing my studies, for example, and then the other screen I'll be researching something that's beyond the next step, creative kind of thing, because I love it, you know. It's not just the money element. I really think it's beautiful to be able to value a company and watch its value change, assign a fair value, and see sometimes those reversions come into play. The making money bit's obviously a bonus, which is nice, but you know, money's just money, isn't it? Elon Musk is the richest man in the world now. Do you think he really cares whether he's worth 100 billion or 200 billion? No, he's doing it because he loves it, man. Whilst I was never in Tesla to make the money people have, I just had a couple trades over the years. I'd say I'm super happy for everyone who made money there. Elon Musk, great guy, deserves all the success coming his way. He doesn't care what anyone thinks of him. He literally just believes in his source. I respect that. Largely. In fact, one of the people I respect the most across the entire game. He gets a lot of criticism, but it just is what it is. In terms of how much I dedicate to a day, I wouldn't know, but I do research a lot. My trades, though, the time is so small versus how much I'm researching kind of thing. The actual trading bit is minuscule. Could be a couple minutes action. The planning's more important. Excuse me there. Anywhere between. Just gonna place this Enquist thingy. So I want them. Anywhere under 13. Actually, yeah. For the next 2 months, there's no major risk. Futi Manama, thank you for your time, sir, is what you've just said. Thank you for your time, for watching the stream, supporting the likes, comments, the subscriptions to our YouTube channel. It's all free. Goes a long way, and we appreciate you all for coming through. It's always a pleasure to talk markets, show everything that's going on in the world, discuss why, most importantly, and how we can generate value, trade or invest, whatever time frames you prefer. I'm just going to write this final idea though. I want these guys, what was it? Oh, really? Then anywhere under 13 to 12.7 likely, and target, one sec, oh, if you guys aren't on, well, you followed our YouTube and all that stuff, if you're on Twitter, feel free to follow me on Twitter at RyanKier2. This is me. I regularly post whether we're streaming and stuff there, and I post some thoughts just whenever I feel like it. My location is familiar with Saudi thinking, because that's what every oil article says. A source familiar with Saudi thinking has said that there's a likelihood of increased production. So that's my location. And if you want to watch the podcast too, boom, feel free to watch that. I need to release one. It's been a short time since. I'm just going to double check my price targets. Yeah, really. 16. Let's just say 15.5 TP zone. Looks like trade payables. To 16.5. And I'll adjust it for my model later. Can't be bothered now. It's 9:34 p.m. I'm going to go cook some dinner. Tonight we're cooking chicken and pasta. That's some real good food. Tell you that. I'm going to relax, watch, I don't know, some food travel review stuff in the evening. Oh yeah, that's Jack Ma's face. That is an example of the stuff we've raised for the people sleeping rough in our community. If you guys haven't followed me on Twitter before, the community got together and we raised it's now £585 plus 600 pounds actually for people sleeping rough in my local community. Today I was out taking sleeping bags, blankets, and these little bags that have anything from toothbrushes, storage containers, to pocket tissues, masks, all wrapped up. Ooh. Emergency blankets, couple of those Gray's protein bite bars, just little bits. Thank you guys for supporting that. That has done a lot, even though I thought it would be difficult for us to hit our goal. But nonetheless, my target stop will be SL 11.5 ish lower. Okay, boom boom boom, time 0801 2021, time 21:36. Okay, that's enough for this. Whoa. Meat Mill. Love that guy. Well, to the 21 folks that have been tuning into the live stream, it's been an absolute pleasure. I was going to play some music, but this is going to get copyrighted if that happens. So, I've been your host, Ryan Kier of the Quantium Research live stream. If you like what we do, check us out on Twitter at the Quantium Cast. I'm on Twitter also at Ryan Kier 2. If you want to subscribe to our YouTube channel, check out some of the content there. Be my guest. We appreciate all the support, comments, all that stuff. It goes a long way. And if you like the podcast as well, you can find that easily. Our website is quantiumresearch.co.uk. Here's a little slick. Boom. Look at that. The new one isn't out fully yet, but it's starting to come across nicely. This section. Oh, is it actually? Yeah. It is. Some sections I need to fill some new stuff on, but look at this. Look at this. Wow. Didn't realize it was available. I'm not sure. Oh, I haven't filled in those. Okay, cool. Well, a couple of articles, all that stuff. Throwback to when we called oil breaking out, I think, to 72 or something. The Saudi refinery attack. We called that move. And it was so on point. Couple of crazy calls there. Podcasts, everything. Why I want to buy shares in Alibaba. Takeaways, how do they work? Future of the restaurant business. This was September. Now the restaurant business is in ruins. Wow, well. Enjoy the pasta. Thanks much, Ryan. Cheers, man. I shall catch you soon. As I always say, I've been Ryan Key of Quantium Research. Until next time.